Redhawk Capital Partners has been formed to attract investors interested in the UK commercial real estate market, which is considered to be in a cycle of recovery, and to take advantage of the opportunities currently available to acquire very good quality assets at discounted prices.
In my capacity as a senior manager at HSH Nordbank, I was responsible for lending over £1 billion to Stuart Legassic. As an example, HSH provided the senior debt for the purchase of 70 Gracechurch Street from Marks & Spencer's. The SLG team sold the property within 16 months and returned over 300% to the original investors. On behalf of Deutsche Hypotheken AG, I can confirm the bank is prepared to provide debt to Redhawk against future good quality purchases.
It's through observing the way in which private equity funds have operated over the last 5 years, where the ethos has been fee rather than profit driven, that has inspired Redhawk to structure its fund in a different way. Management and investors' interests are aligned by it being transparent, so that the fund only earns its fees after a prescribed rate of return to investors has been achieved and certified on an annual basis.
When I was first tasked with researching property opportunities for primarily sports and entertainment clients, I came across Stuart Legassic and his team. During the course of 5 years, my clients invested substantial funds in commercial property transactions introduced by Stuart and his team. And I have to say, without exception, my clients received returns well above expectation, but importantly, often in a shorter time frame than anticipated when we made the investment. I do strongly endorse the approach and philosophy of the new Redhawk Fund, and I've no doubt that they will deliver excellent returns to investors going forward.
The area of stock selection, always one of the fundamentals of good investment in the real estate sector, has been given particular focus by Redhawk, and as a result, affiliates have been appointed in the target investment locations, such as Bristol and Cardiff. They'll carry out a detailed analysis of every commercial property in these cities, which provides Redhawk with the necessary intelligence to know which tenants require new space and which tenants wish to renew their existing leases or relocate. This enables the Redhawk team to provide better, more cost-effective solutions for tenants, whatever their requirements, and therefore better returns to investors. The Redhawk team has been handpicked from the best in the real estate industry.
In 2003, just prior to my promotion to Chief Executive of XL Insurance, I was introduced to Stuart. XL Insurance had leases on 6 properties in the City of London and wished to relinquish those leases and relocate into a flagship headquarter building to reflect the company's prominence and prestige in the insurance market. Stuart proposed that his team would take on the responsibilities for the 6 leases and provide a new 25-year lease on a flagship building at 70 Gracechurch Street in the city. Based on the tax advice received by XL, Stuart and his team bought the freehold of Gracechurch Street and gave XL an attractive proposal to mitigate its existing lease obligations and cover fit-out costs. They were able to provide a lease on Gracechurch Street at a meaningful discount to market. This deal was described as the deal of the year in a press release in the front page of the business section in the New York Times. Based on my experience during this transaction, I personally have no hesitation in endorsing the abilities of the Redhawk team to formulate and structure similar deals that work in the best interests of tenants.